All right, good morning, Checkmate crew. It is actually 1:14 a.m. in New York City. It's well before the opening bell of the New York Stock Exchange. It is today, Thursday, March 2nd, 2023. Sorry, guys, for the abrupt schedule changes for some of the new business deals that I'm doing. It does require some traveling, and so because of my busy schedule, I have not been able to have a stable time where I could just have a regular session of the market memo like this. I will try to go to a normal schedule, but again, when things come up, I may have to leave town, and sometimes I'm not available at that time. Usually we do it 30 minutes after the opening bell. So hopefully I'll still be able to do 3 or 4 videos or streams a week. But, we'll play it by ear. But I'm still trying to get you guys trades and get you guys market analysis so that you guys can manage risk effectively. So here goes today's session. Okay, so first off, let's talk about some changes to my trades. SBLK, got rid of it. We're no longer in SBLK. See, there's no more position tags on Thinkorswim. So we got my maximum profit was $4. Well, that would have been the maximum payout. So we got in at 3. Remember, we sold some covered calls a few months back for 45 cents. We brought our cost basis down to 255 on those longer dated leaps. We rolled them into the month after. I believe we were in the April contracts. Remember the April, we rolled it into the 22s now, and we were in the 18 calls in January. However, the market was giving me about a 5% over on 4 to close the position. My max profit, if I had held this all the way to April, would have been $4. That would have been the max payout. So what was it, from 265 to 4? I mean, that's still pretty good, but I got out at 420. A little bit over, which shouldn't really happen. But I think because of the way, that the bid and ask spread was, I was able to capture about 20 extra cents on top of max profit. And so when the market gave me that extra 5% for free, I took it, okay? So overall, we made about 70% in just a matter of I think it was like a 1 month hold. So 70% in 1 month, hey, I'll take it. That's a win. So we closed that position out. It was a great win for us. We got in at the right time. Beautiful. All right. Another trade that I just got into. I got into this today. And again, I told you guys this during Discord. All my trades I post on Discord. Even when I'm traveling on my phone, I will post live when I do a trade. So again, guys, I always tell you guys this. Hit the link on the video description below. There's no trade fees. There's no paywalls. You got nothing to lose. There's nothing to lose, okay? I broadcast every trade, everything in real time. So if you're one of our Discord members, and again, it's free, you got the real-time alerts on when I got in. I got into the corn futures spread. As you can see here, you see the Thinkorswim tag. There's nothing to, I hide nothing from you guys. I show everything. We bought the $650 per bushel strike for the May contract, okay? May contract. So we're long the 650 call. We're short the 700 for a call vertical debit. We got in at around $9.25. My max profit is $50. So there's about 4 to 1 reward to risk ratio. I can make about $40 in profits for every $10 or so that I'm risking. It's a little bit less. It's $9.25. So I'm making my max profit is actually a little bit more than a 4 to 1 reward to risk ratio. So I like the odds. I like the time. I still got 50 days on them. We've been talking about the corn and grain trade for a very long time. I mean, I don't know how many times we've talked about it. We've talked about it actually ever since the end of actually, we talked about it here. We tried to get into a corn trade here. Remember back in June? We tried to get into June. We also tried to get here around November and December, but it never dipped far enough. And then finally, we got a dip, and then not only that, it gave us an exhaustion signal. Look at this. It gave us that exhaustion signal, and right before future settlement is actually a couple of hours before the stock market closes. And so right as we got near future settlement, I noticed that this was we got that a signal where basically sellers, it was a seller strike. The sellers just disappeared from the market, and all of a sudden corn just caught all these bids. It's not necessarily that volume was big, although volume was pretty decent, but sellers just pretty much went on strike, and we saw that. And so right as I saw that, I entered the trade in corn. We've been planning this for I don't know how long, like more than half a year. So we finally got it. And you guys know what my corn thesis is. Last 2 years, a lot of farmers have not been fertilizing their soil. I think in about, it can be in 2 or 3 months, or it could be in about 6 to 9 months. The world's going to find out that there's going to be a shortage of corn. And we've been talking about this since end of the year, last year. And we've been talking about more about the fertilizer shortage as well, too, and how fertilizer demand is going to go up by the end of the year. So this is something that we've planned way in advance. I'm already in the profit in this. We're already about 10-15% ahead on this spread. I am going to keep it until corn prices get to around 670 to 675 range, at which point I'm going to start taking some profits. Most likely, those call spreads will have doubled or tripled. I'll probably get out of probably 2/3 or 75% so that I can capture a very nice gain and leave a few runners just in case if it keeps running. So we shall see. But for now, that trade is paying off. So congratulations to those who followed. This does require you to have a futures enabled account. I don't know if a lot of you were able to follow because of that. It's one of those things that you have to apply for in your brokerage account to trade futures. Before you go on a live trade with futures, I do recommend that you paper trade for at least a year or two so that you can understand how margin and how buying power works for futures, okay? So that's that. Let's look at also market internals. Right now, the S&P 500 has been on a decline for the past couple of weeks now. Remember back in February 8th, I told you guys that the junk bonds advanced decline line had 4 days in a row, and that was a time when I said, hey, be careful whenever you go long now on stocks or equities, because we're now seeing some weakness in market internals. Well, lo and behold, look at that. We got a 2-week heads notice about this sell-off, okay? So that junk bonds advanced decline line is an extremely powerful tool. And actually, let's go over that little bit. I haven't updated it on a regular basis. I've been updating the advanced decline line in our Discord group every couple days. So the last time I did that was after the Monday session. So just so you guys know, for those of you who are following the videos, what's going on here? So yes, right now, whatever's on the Discord is updated until the end of the 27th. So let's just look at the 28th and the last session's numbers. On the 28th, we had a decline. We had a decline about 300 or so. And then on the first, last session, we also had a decline. So we had, remember from early February till around now, we had like 13 declines in a row. We had like 1 advance, and now we're back to about 3 declines in a row. So in order for us to be out of this, this kind of weaker junk bonds advanced decline line signal, we would want to have 4 advances in a row. We have not seen that yet, okay? And usually to get 4 advances in a row, you usually see like 2 or 3 advances in a row at first, and then maybe a couple declines, and then the overall change starts to slope up over the course of a couple of weeks, and then you start seeing 4 advances in a row. So for this to strengthen again, for for our junk bonds advanced decline line to strengthen again, it's going to take at least a couple weeks. That's generally how long it takes for risk assets to catch a bid again. So this is not something that can change like just in one reading. Okay, so if I post just every couple days, it should be fine. Okay, we're not gonna miss it just because I post only once every couple days. All right, so don't be too worried if I don't post it on a daily basis. I know I got a lot of DMs from you guys. Oh my God, where's today's junk bonds ADL? It's not a day-to-day thing. You want to be looking at these 4 to 7 day trends. So again, you want to see this curling up, and then you want to see that 4 advances in a row. We haven't seen that yet, so again, that may take a couple of weeks to see that strengthening of that junk bonds advanced decline line. And as always, I'll share that with you guys almost on a daily basis. I'm trying to do it at least once every 2 days, so we'll catch it no matter what. Okay, but for now, the junk bonds advanced decline line is showing weakness in market internals. However, surprisingly, the New York high-low line, the New York Stock Exchange high-low line, the how many stocks are making 52-week highs versus how many are making 52-week lows, that is still going up, actually, surprisingly. So there's still some resilience in some pockets of the stock market, actually. So we're seeing some data divergence now. We're seeing junk bonds actually showing weakness, but New York Stock Exchange high-low line showing still some strength. So does that mean that one is going to win over the other? No. I mean, generally, when you have these data divergences, we usually see lots of chop in the market. Okay, that's usually what I notice. I don't see any different now. Sometimes we see these big 1.5% moves up and down on a daily basis. So I think it's kind of confirming that. If you look at the New York advanced decline line, it is coming down, but surprisingly, it's not as down as one would think with the S&P 500 coming down this many days in a row. So it's still kind of resilient. So we're seeing a lot of mixed data. Okay, some data points are weak, some data points not so weak. So in that time where there's not much clarity, it's best to just sit out and be extra patient and extra disciplined. And that's what I've been doing. I've been really just waiting for the best opportunities. Corn was one of them. Finally, we got an opportunity to trade that. Some of the other things that I'm looking at, you guys know what I'm still looking at. MOS. So MOS is one of those stocks. Remember, it's part of our corn and planting and commodity thesis. It's been running away from us, actually. We've been wanting to get in since around mid-January, and I thought we were going to get a bigger dip around the 40-45 zone, but we're not getting it. Now I've moved up my buying level. I still have an alert here, but I'm willing to actually venture into a buy if it gets to around that 49 to 49.50 zone. So if Mosaic gets to $49 to 49.50, I am definitely buying with both fists. Okay, I'm not gonna wait for this any longer. I'm going to buy a 49 to 49.50. All right, MOS. No matter what, that's what we're gonna do. SILJ. You know what? SILJ gave went down a little bit here. It kind of looks like right now I should have bought right here, but still, what I'm really afraid of right now is that this might be just a little relief bounce, and it may actually go lower. And the reason why I'm saying that is because on GDX, GDX tends to be the more traded metal mining ETF. I just feel like this is going to go up and then just retest and then come back down, and the chart is telling me that. But not only is the chart telling me that, guys, I don't like to base anything really off of charts, but also too the trading environment and the market positioning. Remember, guys, how I told you that the yield inversion trade is one of the most crowded trades out there. And so right now, if you actually look at the yield inversion trade, the last time I checked, and let's just take a look together. Yeah, see this? Oh, wow, what is going on? There's so many other things I'm looking at too. Okay, yeah, the yield inversion trade is actually getting even more crowded. More people are piling into it. So the yield inversion trade, we've been talking about this since the beginning of the year. The yield inversion trade is people going long on longer maturity treasuries, like 10-year, 20-year treasuries. They're going long on that, and then they're shorting the shorter term treasury notes. So what ends up happening is that the yields become more inverted, because as they're shorting the shorter term rates, when you short that, the yield goes up. Price comes down, but yield goes up. So the shorter end of the maturity curve rises and the longer end drops. And so that's why you're getting more and more yield inversion. So this is telling us that more and more people are thinking that there's going to be a recession soon. More and more people are thinking that Papa Powell is going to come and save the day and cut rates at the end of the year. More and more people are piling on to that trade. I don't think they're right. And, and we've been saying this. And so I think around March, April or so, there's going to be a rude awakening, especially after the debt ceiling gets approved in the United States. Once the debt ceiling gets raised, the U.S. Treasury is going to dump a lot of long-term treasuries into the market. So all those people who are long those longer-dated treasuries, they're going to wake up to a very rude awakening, and we're going to see the longer end of the yield spike, and we could see a dash for dollars happening when that happens. And that is going to send probably the stock market on a volatile churn. It's going to also affect metal prices, and anything priced in dollars and metal miners, I think, are going to have a big drop when that happens. So that kind of market positioning is stopping me from entering any new trades in metal miners right now, even though I thought that 930 level that happened a few days ago, I did think that kind of looked nice, but again, just that market positioning has me kind of scared for this. I do think that we're going to see lower prices in this. I might be wrong, but you know what? I'd rather be wrong outside looking in than in a trade trying to get out and being wrong on that, okay? So to me, capital preservation is key, and that should be the key for any trader, okay? Your number one job is to protect your capital. So I'd rather be wrong looking out, being outside, looking in, rather than being wrong on the inside, trying to look out, okay? So that's just my philosophy. That's just how I trade. You can do whatever tickles your fancy, but that's just how I do things, all right? So I do think that this yield inversion trade is going to blow up, and when that happens, that will probably give us the best opportunity for that SILJ trade. So again, patience and discipline. While our market internals are weaker, while this hasn't unwound, this yield inversion trade hasn't unwinded yet, I am going to remain patient and I'm going to remain disciplined, okay? So I just wanted to share that with you guys. Let's also take a look at natural gas and other things as well too, since we're on this idea of commodities. Natural gas, nat gas has kind of bottomed out a little bit right here. It kind of had this huge rally. I think market participants are already seeing that this pricing is too low based on the fertilizer shortage. And again, that thesis, we talked about it many, many times. The potassium-based fertilizers are running really low. And so at some point, they're going to have to start looking at urea-based fertilizers, and those urea-based fertilizers need natural gas to make it. So once they see that there's a fertilizer storage, there's gonna, the natural gas price is gonna go up, and then at the same time we might have some cold weather. I mean, that might be a double doozy. So I do think natural gas prices are headed higher. Everything around natural gas actually has been catching a bid. Even our FLNG, which is our natural gas tankers, natural gas shippers, they're actually doing really well too. So not only do they pay a very good dividend, their prices have been going up. And actually, if you look at FLNG as well too, their dividend actually also caused one of our options to go down in strikes. So remember, our strike was at 25, but then after that big dividend, our strikes got lowered to 24.75. So we're about break even on those still. I still think there's a lot more ahead. I mean, if natural gas really catches on, like by the end of this year, I mean, FLNG, could be, this could be like a $60-$70 stock. All right. And if that's the case, we're gonna like 400-500% gains on our FLNG leaps. Okay, we're gonna have 400, 500% gains if that happens. Okay, and so that's what I'm waiting on. Hopefully we get that. We shall see what happens. Okay. Next update, crypto. Let's talk about crypto for a brief minute here. I didn't see anything really too crazy in crypto. The options market, the OIs have been, I mean, it's been about a day or so since I checked it. So it could have gone up in the last day. I know that things can change very quickly. Oh, look at this. Bitcoin is back at 6.4 billion in notional value now. Oh, it was in the, yeah, when I checked last, it was just teetering right below 6, and now it's at 6.4. Okay, so we're seeing people coming back in. Okay, we're seeing people come back in. What kind of trades are we seeing? Mostly regular trades, of course. Puts, bought. What about the block trades? Calls, bought. Calls. Mostly actually, puts sold. So we're seeing puts sold and calls bought. Some more bullish trading in Bitcoin. Okay, very interesting. So that's Bitcoin. Let's see what's happening in ETH. I didn't see anything. Oh, ETH is going up too. It looks like ETH is going up too. 5.6. Okay, so it's still kind of low, but at least it's not dropping. Okay, it's not dropping. I want to see it at least $6.5–7 billion before I start saying, oh, okay, like, you know, now options prices can pull spot prices. Until that options OI is greater, it's not going to affect price all that much. All right, so Ethereum, not much yet, but Bitcoin is gaining traction again. Interesting. Okay, so let's take a look at ETH. Actually, what kind of trades were happening on ETH? The block trades or calls sold. A lot of calls are getting sold. It could be covered call writing. If OI is going up as calls are being sold, that could be just covered call writing. But let's just take a look at the block trades and see what's going on here. It doesn't look like very many block trades. Look at that. It's very, very small trades. So those don't really matter much. But okay, so it looks like retail really dominates this, and it looks like retail is kind of mixed in all of them. Okay, so retail's getting involved with Ethereum. Maybe it's because of that Shanghai upgrade that's about to happen. We shall see. But let's take a look at Bitcoin. Let's see if there's any big block trades happening. Yeah, a few big block trades here. 130, 130.02 right here. It looks like a sell, buy. Sold a put to buy a call. Sold a put to buy a call. That's a risk reversal trade right there. Sold. That's an extremely bullish bet. When you sell a put to pay for buying a call, that's an extremely bullish bet. So somebody's going extremely bullish with sell a put to buy calls. More risk reversal bet right here. So, okay, so we're seeing extremely bullish betting on Bitcoin. Okay, extremely bullish betting on Bitcoin as far as the block trades are concerned. So that's Bitcoin. Also, you guys have probably noticed on Discord, I've been doing a lot of sports betting, and that's kind of been like helping me manage my FOMO in the market, believe it or not. So it's kind of therapeutic. After I've been doing a lot of sports gambling, I just really don't have the need to rush into a stock trade. So it's helping me out a bit. And so I just put about $100 in. Right now, I'm at about $200. So I've about doubled my money so far in sports betting. And so I just wanted to share some of my lines with you guys. These are some of the lines that I'm looking at. I don't know how aggressive the data source is that I use and going after people who publish that data like openly for other people. So I just took pieces of it so that, you know, nobody can see the logos and such. But anyway, these are the player props that I'm looking at right now, and if I see any one of these, so there's Donovan Mitchell, Isaac Okoro, all of these are unders. So when or no, this is an over actually, but what I look for is actually unders. You know, if I see, like, for example, something like this, like Javon Carter, for example, here the under is very, very much more like, you see a lot more money in the unders than in the overs. You know, usually what I do for these under bets is I look for like the first half points, and I go under for their first half points, and it's got to be about half or higher than this initial line that's stated right here. Mostly though, unders or Troy Brown, that would be a great first half under on points. If it said something like, you know, under 5 or 5.5, I'd definitely be taking that for the first half. Some of these overs are really nice too. Actually, the overs that I'm looking at are Malik Beasley and Aaron Wiggins. I'd look to go over not on the first half of games, but for the full game, I'd be going over on these lines right here. Another thing that I like to do is for my overs is I wait for the second half. So the second half player props usually opens up around middle of the second quarter, and by that point you can see who's doing well and who's not. So if some of these overs are doing well by the second half, by half of the second quarter, I will take a second half over on half the line right here. So 17.5, that would be like what? Between 8.5, like 8.5 or so. So if it has if there's like 8.5 or something like that over for the second half, and Malik Beasley's doing well in that game by the by half of the second quarter, I'll go over on his second half points. If that's the case. So that's just one of the things that I've been using. I haven't done research on the rebounds, assists, or the 3 points made yet. I'll try to do that. I'm stuck in an airport right now, so I might be doing that after this feed. And of course, I've been showing my bets and everything live on our Discord as well too. Also on Twitter, twitter.com Mickey Blindside. So I've been posting all that stuff there too. So follow along again, Discord or on Twitter. I post those as well too. So this has been quite fun. It's been actually quite nice to do. So we will see what happens here. Okay. So that just wraps up our market memo for today. And again, the Discord invitation link is in the video description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right. I don't know when I'm going to be able to do this again. I'm going to try to do, again, at least 3 or 4 of these a week, as I've always done. The times may be scattered, but again, I'll always post them on YouTube, and I'll always let you guys know on Discord what my schedule is. I'm here for you guys. I love you guys for staying with me. I love you guys, for DMing me and checking up on me. I really do appreciate all of that. I love you guys. So, I'm here for you. So whenever you guys have any questions or anything like that, it's something you want to see on the video, just DM me and I'll try to include that into the episodes as well. Hope you guys have a wonderful day and trade safe. See you guys soon.